For more on Nvidia, let's bring in James Wang. He's currently an analyst with ARK Invest, which is an investor in the company. And he worked at Nvidia for 9 years on their PC gaming application, so he knows the company and their products very well. James, welcome to the show. Great to have you with us. I think that there are two main buckets of concerns for Nvidia. And so let's first address number one, and that is the impact of the trade war. What do you think they're going to say tomorrow?
So far, they haven't said too much about the impact of the trade war. When you look at Nvidia's chart and you wonder what has happened, it's really all about crypto and cryptocurrency mining from a year ago. So that's had a cascading effect. Basically, people who are mining non-Bitcoin like Ethereum are buying tons of GPUs. And then now that those crashes have fallen, they're no longer selling those. So they need a few quarters, as they've said, to clear the channel. And I think AMD in their recent call said that they're starting to see the channel clear. So I think the setup for Nvidia is really about the guidance into second half. Do they still believe in that bounce back? If they still have that intact, I think investors feel fairly good about that.
The other concern is the competitive concern. You mentioned AMD, and that certainly is a competitor, but even emerging competitors who are not necessarily in the chip space. We have you on really because I saw your post on ARK Invest, and it talked about Tesla's move into chips, making its own chip. Why does it need to go to Nvidia? Is that a threat? I mean, your firm is invested in both.
Yes.
But is that a threat to Nvidia's business?
It is not a threat. In fact, Tesla going hardcore, designing their own chips is probably the best thing that will happen for Nvidia. And here's why. When Tesla goes full mode, full craziness into autonomy and say, we're going to do this ahead of everyone else, it's basically saying to the rest of the auto industry, you need to invest. If you don't invest, you will be behind. You will not even be feature parity versus our cars. So if you're a Ford, if you're a GM, and you don't want to fall behind, you have to go to the best chip supplier that can provide something that's comparable to the Tesla solution. And Nvidia is the only company out there who is providing chips that's comparable to the Tesla solution.
There are a lot of autonomy efforts going on right now. So is Nvidia the primary supplier for a Waymo, for a Ford, for a GM, wherever else is operating? The
primary suppliers are basically Nvidia and Mobileye, which is a division of Intel. Mobileye is really coming in from the low end, what they call ADAS, basically trying to prevent you from crashing. Nvidia is coming in from the high end with an AI perspective. They want to do computer vision and autonomous driving. So those are the two primary competitive forces. Nvidia has already said that they're going to offer a level 5 solution. Mobileye's level 5 solution is still further out. So I think if you feel the pressure from Tesla as an auto executive and you want to be on feature parity and you want control over your software stack, Nvidia provides that for you. Tesla bears are, and there are plenty of them out there, Tesla bears, that is. Yes, are you going to take a look at that chip, that Tesla, the picture that Tesla provided and said, you know, this is phony? There's no way that Tesla could actually catch up to an Nvidia and make its own chip. How could that have happened? I'm quite puzzled by what they mean. The Tesla computer is shipping in every model Tesla car today out the factory. This is better. Is this a better chip than Nvidia? This is a chip that Nvidia will be able to build, roughly speaking, maybe in a year or two. And the reason is Tesla only has to build its chip to satisfy its own software requirements. Whereas when Nvidia builds a chip, they're like Intel, right? They're an ARM supplier. They have to satisfy Ford's requirements, Toyota's requirements. Everyone wants something on the silicon or wants it to do something. And then all of a sudden you have a complicated chip because you're satisfying many customers. One's a horizontal play, one is a vertical play. Right. Last question. Would you rather?
We love this game, James. Yeah. You have to play.
Tesla or Nvidia? Tesla or Nvidia? Which is the better return?
I think for this audience, I think Nvidia is probably a gut risk adjusted better stock because you're not going to go through the volatility of Elon. You're not going to go through this overhang of liquidity and raising capital. Nvidia has, you know, they're flush with cash. They will continue to grow top line. They will eventually grow bottom line as well. All right. James, thanks so much for coming by. We really appreciate it. James Wang of ARK Invest. I'm going to pose that same question to you.
Probably Nvidia. I mean, listen, if Nvidia misses and guides down, it's going back to those lows that it was just at, 6 months ago or something like that. But I agree with his thought process on it. The only thing is like if you're buying Nvidia only because the autonomy opportunity, it's probably years off. And that's what the Tesla bears are trying to tell you, that Elon's stuck on the autonomy thing right now because it's probably one of the sexiest stories when sales of EV are really slowing. At least his.
Look, I've spoken to Kathy Wood, and we've hearing this from James. The argument on Tesla has to be that they've got such a competitive advantage or such an advantage on the data front because it's not an auto company and it's not a technology company. So you have to believe that. And ultimately, it gets back to where they have a competitive advantage and a moat. And, certainly in nanotechnology, it sounds like the chip is something that people are banking on. The end of the day, it's still a company that needs to deliver and has cash flow issues. And that's where I think the bears are lining up.